Morning. Today's Monday, 1st of June. Welcome to the new month. Today we're visualizing all the world's money and market. It's a pretty big graphic. We've had to place this one into the comments section just for the sheer size of it, but we'll summarize here today too. As humans, we can become desensitized to extraordinary events when we get used to bad before it goes to worse. Part of the process is not stopping and taking stock of what these incredible numbers that quantify bad actually look like in context. We often remind readers of the scale, what a trillion is. We can all count to 1 second. 1 million seconds is 8 days. 1 billion seconds is 31.7 years. 1 trillion seconds is 31,709 years. Remember, it took a century from when the US Fed was established in 1913 to reach 1 trillion in bond assets, US Treasury bonds bought with freshly printed currency. Since the GFC, they've added 3.7 trillion, and this year alone, they've added around 3 trillion to reach 7 trillion, and still growing fast. Additionally, the US government budget deficit this year is projected to hit 3.8 trillion, more than double the previous record of 1.41 trillion in 2009. Visual capitalists have a great way of showing such matters with succinct explanations. Their latest is all of the world's money and markets in one visualization, as we've shown in the comments section. It does, as the name suggests, using individual squares worth 100 billion, or 3,171 years, counting 1 Mississippi, 2 Mississippi, 3 Mississippi, and so on. The relevance of the infograph for gold and silver is clear. When that mountain of money in these other paper assets flees to the safety of precious metals assets without counterparty risk, with real intrinsic value, courtesy of constrained supply and thousands of years of monetary stability, that same constrained supply leaves one variable after demand and supply, and that is price. As governments continue to rack up more and more debt, injecting stimulus faster than it can create income returns, and central banks create more and more currency, more and more people flock to gold and silver as a hedge against what always follows. Economists often talk about this in terms of Exeter's pyramid, and we presented it as such back in 2017. But below is an update of the present date. Think of it as an inverted Exeter's pyramid. P.S. This is a pretty long graphic. You might have to click on it to expand it open. And if you are having trouble, you can always zoom over to ainslebullion.com.au and read any of our news and see any of our graphs as well. Welcome to the week. We look forward to catching you tomorrow.